Question 1. A homeowner in Washington has a policy that covers their personal property on a replacement cost basis. After theft, the homeowner files a claim for a stolen television that was originally purchased for $1,500 but now has a depreciated value of $800. The replacement cost for a similar television is $1,600. What amount will the insurance company pay under the replacement cost policy? A. $800. B. $1,500. C. $1,600. D. $1,200. Answer: C. $1,600. Explanation: under replacement cost policy, the insurer reimburses the policyholder for the cost to replace the lost or stolen item with a new one of similar kind and quality without factoring in depreciation. In this case, the depreciated value of $800 is irrelevant because the policy covers replacement cost and the current replacement cost is $1,600. Washington insurance regulations require insurers to clearly explain the difference between actual cash value (CV) and replacement cost in their policies. A CV would have accounted for depreciation, but replacement cost policies ensure that the homeowner is able to replace the lost item with a similar new one. Question 2, scenario-based. Ms. Thompson owns a home in Washington and has a standard homeowner's policy. Recently, her area experienced heavy rainfall and the sewer system backed up, flooding her basement and damaging her belongings. Ms. Thompson files a claim with her insurance company to cover the damages. What is the most likely outcome of her claim? A. The claim will be denied because flooding is always excluded from homeowners insurance. B. The claim will be partially paid based on the personal property coverage limits minus depreciation. C. The claim will be covered in full if Ms. Thompson purchased a water backup and sump pump overflow endorsement. D. The claim will be covered only if she has earthquake insurance, as flooding from rain is considered an earthquake-related event. Answer: C. The claim will be covered in full if Ms. Thompson purchased a water backup and sump pump overflow endorsement. Explanation: standard homeowners insurance policies typically exclude water damage caused by sewer backups or sump pump overflows unless a specific endorsement has been added to the policy. In Washington, homeowners can purchase endorsements like the water backup and sump pump overflow endorsement, which would cover damages related to this type of incident. Flooding in general is excluded under standard homeowners insurance policies and requires separate flood insurance through the National Flood Insurance Program (NFIP). Earthquake insurance is unrelated in this case as the damage is due to water backup rather than seismic activity. Question 3. In Washington, a homeowner's policy includes coverage E. Personal liability if a visitor to the homeowner's property trips over an uneven sidewalk and sues for medical expenses and pain and suffering. What is the likely scope of coverage under the homeowner's policy? A. The policy will only pay for the visitor's medical expenses under coverage F. Medical payments to others. B. The policy will cover both the medical expenses and any legal costs under coverage E. Personal liability. C. The policy will deny the claim due to the sidewalk being a pre-existing hazard. D. The policy will only cover damages to the homeowner's property, not injuries to visitors. Answer: B. The policy will cover both the medical expenses and any legal costs under coverage E. Personal liability. Explanation: coverage E in homeowners policies provides personal liability coverage, which protects the homeowner against legal claims for bodily injury or property damage for which they are legally liable. This coverage typically includes not only the medical expenses of the injured party but also any legal defense costs and settlement amounts up to the policy limit. The exclusion of pre-existing hazards would not apply unless the homeowner had been aware of the risk and acted negligently. In this case, the visitor's trip and fall would likely be covered under both medical and legal liability provisions, making option B correct. Question 4. In Washington, which of the following factors is likely to have the most significant impact on a homeowner's premium for the homeowner's insurance policy? A. The homeowner's credit score and claims history. B. The number of occupants in the home. C. The homeowner's driving record. D. The length of time the homeowner has lived in the state. Answer: A. The homeowner's credit score and claims history. Explanation: in Washington, insurance premiums for homeowners policies are often influenced by factors such as the homeowner's credit score and claims history. Insurance companies view individuals with poor credit or frequent claims as higher risks and may charge higher premiums. Other factors such as the home's location and construction may also affect premiums, but driving records and the number of occupants do not typically have a direct impact on home insurance rates. Question 5, scenario-based. Mrs. Patel owns a rental property in Seattle, Washington, and has insured it with a D3 dwelling fire policy form. During a tenant stay, the roof is damaged in a windstorm. Mrs. Patel files a claim with her insurance company. How will the company process this claim under the DEPA 3 policy? A. The claim will be denied because DEPA 3 only covers fire damage. B. The claim will be covered under the open perils provision of the DEPA 3 policy. C. The claim will be covered, but only for actual cash value, a CV, regardless of policy terms. D. The claim will only be covered if the tenant caused the damage. Answer. B. The claim will be covered under the open perils provision of the DEPA 3 policy. Explanation. The DEPA 3 policy, commonly used for rental properties, provides open perils coverage for the dwelling. This means that any peril not specifically excluded by the policy, including windstorms, will be covered. DEPA 1 and DEPA 2 forms offer more limited coverage, but DEPA 3 covers a wide range of risks unless explicitly excluded in the policy. The damage caused by the windstorm would typically be covered under the terms of the E3 policy. Question 6. Which of the following best describes the difference between replacement cost to natural cash value, SCV, and homeowners insurance? A. Replacement cost covers the full cost of rebuilding the home, while a CV factors in depreciation. B. A CV covers the full cost of replacing personal belongings, while replacement cost factors in wear and tear. C. A CV always provides a larger payout than replacement cost. D. Replacement cost includes legal defense costs, while a CV does. Answer. A replacement cost covers the full cost of rebuilding the home, while a CV factors in depreciation. Explanation. Replacement cost coverage provides the amount needed to repair or replace the damaged property without deducting for depreciation. Actual cash value, SCV, on the other hand, takes into account depreciation, which reduces the payout based on the age or condition of the property at the time of the loss. ACV generally results in lower compensation compared to replacement cost unless the policyholder has opted for an ACV policy. Question 7. In Washington, what is one key responsibility of the state's insurance commissioner in relation to homeowners insurance? A. Setting specific coverage limits for all homeowners policies. B. Regulating premium rates and ensuring that they are not unfairly discriminatory. C. Directly settling claims on behalf of insurance companies. D. Approving claims filed under the National Flood Insurance Program (NFIP). Answer. B. Regulating premium rates and ensuring that they are not unfairly discriminatory. Explanation. The Washington Insurance Commissioner plays a critical role in regulating the insurance market. One of the commissioner's key responsibilities is ensuring that insurance premiums are fair and non-discriminatory. The commissioner does not settle individual claims, but is responsible for overseeing the market and ensuring that insurers operate in compliance with state laws. The NFIP is a federal program and not directly overseen by the state insurance commissioner. Question 8. Scenario-based. Mr. Jensen, a homeowner in Spokane, Washington, recently remodeled his kitchen, significantly increasing the value of his home. He did not inform his insurance company about the renovations. After fire destroys a large portion of the home, he files a claim. What issue may arise with his homeowner's insurance coverage in this situation? A. His claim will be denied because the renovations voided his policy. B. His claim will be fully covered, but only for the pre-renovation value of the home. C. His claim will be partially covered because he did not update his policy to reflect the new value. D. His claim will be denied because fire damage is typically excluded from standard policies. Answer. C. His claim will be partially covered because he did not update his policy to reflect the new value. Explanation. When a homeowner makes significant improvements to their property, it's essential to notify the insurance company so the policy can be updated to reflect the new value. If Mr. Jensen didn't update his coverage after the renovation, the insurer would likely base the settlement on the home's pre-renovation value, potentially leaving a coverage gap. Fire damage is typically covered under standard policies unless specifically excluded, so the failure to update the policy's value is the key issue in this scenario. Question 9. Which of the following is typically excluded from a standard homeowner's insurance policy in Washington? A. Windstorm damage. B. Fire damage. C. Earthquake damage. D. Theft of personal property. Answer. C. Earthquake damage. Explanation. Standard homeowners insurance policies generally cover perils such as fire, windstorm, and theft. However, earthquake damage is typically excluded and requires a separate endorsement or policy. In Washington, which is located in a seismically active region, it is recommended that homeowners consider purchasing earthquake insurance as an add-on to their standard policy. Question 10. What is the purpose of the Washington FAIR plan and who is eligible to receive coverage through it? A. To provide coverage for high-risk homeowners who have been denied insurance in the standard market. B. To offer discounted insurance policies to all Washington homeowners. C. To insure properties in rural areas that are far from fire protection services. D. To offer flood insurance to homeowners in designated flood zones. Answer A. To provide coverage for high-risk homeowners who have been denied insurance in the standard market. Explanation. The Washington FAIR Fair Access to Insurance Requirements plan was established to provide insurance coverage to homeowners who are unable to obtain coverage through the standard insurance market due to the high risk of their property. This could be due to factors such as location or loss history. The FAIR plan helps ensure that these homeowners still have access to basic insurance coverage, though it typically comes at a higher cost than standard policies. It does not specifically offer flood insurance, which is managed through the NFIP. Question 11. Which of the following is a required element for a valid insurance contract in Washington? A. The policyholder must be at least 30 years old. B. The insurance company must be based in Washington state. C. Both parties must have legal capacity to contract. D. The policyholder must have at least one dependent. Answer C. Both parties must have legal capacity to contract. Explanation. For any insurance contract to be valid, both parties, the insurer and the insured, must have the legal capacity to enter into a contract. This means that the policyholder must be of sound mind and legally capable of understanding the contract terms. The other factors, such as age or stay of residency of the company, are not necessary for a valid contract. Question 12. What is the primary purpose of homeowners liability coverage in Washington? A. To protect the homeowner's personal property against theft. B. To cover the cost of medical expenses for injuries sustained by the homeowner. C. To cover legal costs and damages if the homeowner is found liable for injuries or property damage to others. D. To pay off the homeowner's mortgage in the event of a total loss. Answer C. To cover legal costs and damages if the homeowner is found liable for injuries or property damage to others. Explanation. Liability coverage in a homeowner's insurance policy protects the policyholder from legal responsibility for injuries to others or damage to their property. This includes covering legal defense costs and any damages awarded up to the policy limits. It does not cover the homeowner's own injuries or the payoff of a mortgage. Question 13. Scenario-based. MS. Andrews has a homeowner's insurance policy in Washington. During a heavy snowstorm, the weight of the snow causes her roof to collapse. She files a claim for the damage. How is the insurance company likely to handle this claim? A. The claim will be denied because snow damage is excluded from most policies. B. The claim will be covered under the collapse provision if her policy includes this coverage. C. The claim will be partially covered but only for half the cost of the roof. D. The claim will be denied if MS. Andrews had not removed snow from the roof within 24 hours. Answer B. The claim will be covered under the collapse provision if her policy includes this coverage. Explanation. Homeowners insurance policies often include coverage for structural damage caused by the weight of snow, especially if the policyholder has collapse coverage. If the collapse provision is part of MS. Andrews' policy, her insurer would likely cover the repair costs. Some exclusions may apply, but snow-related collapses are typically covered under most standard policies. Question 14. Which of the following perils is commonly excluded from a standard homeowner's insurance policy in Washington and requires separate coverage? A. Hail damage. B. Earthquake damage. C. Water damage from a broken pipe. D. Damage from a fallen tree. Answer B. Earthquake damage. Explanation. Earthquake damage is excluded from most standard homeowners insurance policies and requires the purchase of a separate earthquake insurance policy or endorsement. Other common perils like hail, water damage from a broken pipe, and damage from falling trees are usually covered under standard policies. Question 15. What is the typical outcome if a Washington homeowner underinsures their home and experiences a partial loss? A. The insurance company will pay the full amount of the loss regardless of the policy limits. B. The homeowner will receive a payout equal to the replacement cost of the damaged portion minus depreciation. C. The homeowner will be paid based on a coinsurance penalty if the home is underinsured below a certain percentage of its value. D. The policy will automatically adjust to cover the full cost of the loss. Answer C. The homeowner will be paid based on a coinsurance penalty if the home is underinsured below a certain percentage of its value. Explanation. Many homeowners insurance policies include a coinsurance clause, which penalizes the policyholder if they insure their home for less than a certain percentage, typically 80% of its replacement value. If the home is underinsured and a partial loss occurs, the insurance payout will be reduced based on the coinsurance formula, meaning the homeowner may be responsible for a significant portion of the loss. Question 16. In Washington, which type of water damage is typically excluded from standard homeowners insurance policies? A. Water damage from a leaking roof. B. Flooding caused by rising waters from rivers or streams. C. Water damage from a burst pipe. D. Water damage from a malfunctioning dishwasher. Answer: B. Flooding caused by rising waters from rivers or streams. Explanation: flooding, defined as rising water from external sources like rivers, lakes, or storms, is excluded from standard homeowners insurance policies. Homeowners who wish to be covered for flood damage must purchase a separate flood insurance policy, typically through the National Flood Insurance Program (NFIP). Water damage from internal sources, such as burst pipes or leaking appliances, is generally covered under standard policies. Question 17. How often are Washington homeowners insurance companies required to offer earthquake insurance to policyholders? A. Every year upon policy renewal. B. Only once when the policy is first issued. C. Only after a major earthquake occurs. D. Every 3 years during the policy's term. Answer: B. Only once when the policy is first issued. Explanation: Washington insurance companies are required to offer earthquake insurance to policyholders only once when the homeowner's policy is first issued. If the policyholder declines, they can still request earthquake coverage later, but the insurer is not obligated to make annual offers. This is common in earthquake-prone regions where homeowners need to be aware of the availability of additional coverage. Question 18. Which of the following is covered under Washington's FAIR plan? A. High-risk homes that have been refused coverage by at least 2 insurers. B. Only commercial properties in high-risk areas. C. Flood damage in designated flood zones. D. Vehicles at risk of damage from natural disasters. Answer: A. High-risk homes that have been refused coverage by at least 2 insurers. Explanation: Washington's FAIR plan, Fair Access to Insurance Requirements, offers insurance coverage to homeowners who are unable to obtain it through the standard market due to the high-risk nature of their property. To qualify, a homeowner must have been denied coverage by at least 2 insurers. This plan ensures that homeowners in high-risk areas can still access basic coverage, although at a higher premium. Question 19. What type of insurance is typically required for homeowners in Washington who have a mortgage? A. Liability insurance only. B. Replacement cost insurance. C. Flood insurance if in a high-risk flood zone. D. Actual cash value insurance. Answer: C. Flood insurance if in a high-risk flood zone. Explanation: homeowners in Washington who have a mortgage and live in a high-risk flood zone are typically required by their lenders to purchase flood insurance. Lenders want to ensure that their investment is protected against flood damage, which is not covered by standard homeowners insurance. Replacement cost and actual cash value coverage for the home itself are common, but flood insurance is specifically mandated in flood-prone areas. Question 20 is scenario-based. Mr. Daniels' home in Seattle was damaged in a small fire. His homeowner's insurance company is willing to pay for the repairs, but insists that he use one of their approved contractors. Mr. Daniels prefers to use a different contractor. What are Mr. Daniels' options in this scenario? A. He must use the insurance company's contractor or forfeit his claim. B. He can use any contractor, but the insurer may only pay up to the amount quoted by their preferred contractor. C. He can use any contractor, and the insurer will cover the full cost regardless of the price difference. D. He must accept a cash payout from the insurance company instead of hiring a contractor. Answer: B. He can use any contractor, but the insurer may only pay up to the amount quoted by their preferred contractor. Explanation: while insurance companies often prefer policyholders to use their approved contractors, homeowners generally have the right to choose their own contractor. However, if Mr. Daniels selects a contractor that charges more than the insurer's estimate, the insurer may only pay up to the amount their approved contractor quoted. Mr. Daniels would then be responsible for any additional costs. Question 21. In Washington, what type of endorsement might a homeowner add to their policy to cover personal property losses due to theft or damage when away from home? A. Personal injury protection endorsement. B. Personal articles floater. C. Loss of use endorsement. D. Building ordinance endorsement. Answer: B. Personal articles floater. Explanation: a personal articles floater provides additional coverage for valuable personal property such as jewelry, electronics, or fine art that may not be fully covered under the standard homeowners insurance policy. It often includes coverage for losses due to theft or damage even when the items are away from the insured's home. Question 22. Which of the following would not be covered by a standard homeowners insurance policy in Washington? A. Fire damage to the home. B. Theft of personal belongings. C. Personal liability for injuries to others on the property. D. Damage caused by termites. Answer: D. Damage caused by termites. Explanation: damage caused by termites or other pests is generally not covered under standard homeowners insurance policies as it is considered a preventable maintenance issue. Fire, theft, and liability are typically covered under standard policies. Question 23. In Washington, what factor can impact a homeowner's eligibility for the FAIR plan? A. The homeowner's age. B. The condition and location of the property. C. The number of claims filed in the past year. D. The proximity of the property to a body of water. Answer: B. The condition and location of the property. Explanation: the FAIR plan is designed to provide insurance to high-risk properties that cannot obtain coverage in the standard market. However, the property must meet certain condition standards to qualify, and eligibility can be impacted by its location, such as being in a high-risk fire zone. Question 24. Which of the following is true about flood insurance requirements in Washington? A. It is mandatory for all homeowners. B. It is only required for homes located in designated high-risk flood areas. C. It is automatically included in all homeowners insurance policies. D. It is optional for everyone regardless of location. Answer: B. It is only required for homes located in designated high-risk flood areas. Explanation: flood insurance is required for homes that are located in high-risk flood zones, especially if the homeowner has a mortgage from a federally regulated lender. Standard homeowners insurance policies do not include flood coverage, so it must be purchased separately. Question 25. How does Washington law typically treat a homeowner's insurance claim if the homeowner was negligent, leading to the loss? A. The claim will always be denied. B. The claim will be fully covered regardless of negligence. C. The claim may be reduced or denied depending on the level of negligence. D. The insurance company will automatically increase premiums after a negligent loss. Answer: C. The claim may be reduced or denied depending on the level of negligence. Explanation: if a homeowner's negligence directly causes or contributes to a loss, the insurance company may reduce or deny the claim based on the circumstances. However, not all types of negligence will result in a denied claim, and the decision will depend on the specific policy terms and the extent of the negligence. Question 26. Which of the following perils would typically require an additional endorsement or separate policy in Washington? A. Fire damage. B. Windstorm damage. C. Earthquake damage. D. Theft. Answer: C. Earthquake damage. Explanation: earthquake damage is excluded from most standard homeowners insurance policies in Washington. Homeowners can purchase a separate earthquake insurance policy or add an endorsement to their existing policy to cover losses caused by earthquakes. Question 27. Which coverage would pay for temporary housing expenses if a Washington homeowner's house is uninhabitable due to a covered peril? A. Loss of use. B. Additional dwelling coverage. C. Replacement cost coverage. D. Liability coverage. Answer: A. Loss of use. Explanation: loss of use coverage, also known as additional living expenses, provides reimbursement for temporary housing and other expenses if a home becomes uninhabitable due to covered peril. This can include hotel stays, meals, and other costs incurred while the home is being repaired. Question 28. What is the primary purpose of the Washington Insurance Guarantee Association? WIGA. A. To set insurance premium rates for all companies. B. To provide insurance to high-risk individuals. C. To pay claims when an insurance company becomes insolvent. D. To regulate insurance companies in Washington. Answer: C. To pay claims when an insurance company becomes insolvent. Explanation: the Washington Insurance Guarantee Association (WIGA) exists to protect policyholders and claimants if an insurance company becomes insolvent. It ensures that outstanding claims are paid up to certain limits, providing a safety net for consumers. Question 29. Which of the following is not a factor that could influence homeowners insurance premiums in Washington? A. The homeowner's credit score. B. The distance of the home from a fire hydrant. C. The policyholder's driving record. D. The age and construction of the home. Answer: C. The policyholder's driving record. Explanation: a homeowner's driving record typically does not affect homeowners' insurance premiums. Factors such as credit score, proximity to fire protection services, and the home's age and construction materials can all influence premium costs. Question 30, scenario-based. Mr. Lopez's home in Washington was severely damaged in a storm, and his homeowner's insurance will cover the repairs. However, local building codes have changed and the repairs must meet new, stricter standards, which will increase the cost. What type of coverage would help Mr. Lopez pay for the increased cost of rebuilding to code? A. Replacement cost coverage. B. Building ordinance or law coverage. C. Liability coverage. D. Personal property coverage. Answer: B. Building ordinance or law coverage. Explanation: building ordinance or law coverage helps cover the additional costs associated with bringing a home up to current building codes following a covered loss. Without this coverage, the homeowner would be responsible for any extra costs required to meet updated regulations.